Hello guys, welcome to my channel. So this is my first teaching. We move from the basic to advanced. So today we'll be talking about candlesticks. So what is candlestick? Candlestick is a graphical representation of trading activity in respect to time. So the graphical representation of trading activity in respect to time. So candlesticks shows us four things, which is the open, the high, the low, and the close. So anytime you see a green candle represents that a particular asset is buying or price is buying at that particular time. Then red candle shows that the market is selling at that particular time. Green candle opens at the bottom, closes at the top. Green candle opens at the bottom and closes at the top. The long line, the green line you see is called the wick, and we have the high, which is the highest point the price get to at a particular time, and this is the lowest a price got to at a particular time. Then the opposite is for the red candle. The red candle opens at the top and closes at the bottom. Then the wicks, this some is also known as shadow. Some people calls it shadow. This line is called wick or shadow. This is the lowest point a price of an asset traded to, and this is the highest point a price of an asset traded to in a particular time, because each candlestick shows us a trading activity that occur in a particular time. So let me go over to trading view to show you what I mean in respect to time. Here we are on trading view. I said candlestick pattern is a graphical representation of price in respect to time. So we are on daily time frame. So each candlesticks we see here is trading activity that happen within 24 hours. Like yesterday being Friday, 8th of August 2025. This is the trading activity that happened within 24 hours. And as at 7th of August, trading activity that happened within there was indecisive. They were indecisive. It closed with a little body. And here we have Wednesday, 6th of August. So market sentiment was bullish. Hence this green candle. So trading, each candlestick shows you four things: open, high, low, and close. As I hold down this candlestick, look at this area. So as at Wednesday, 6th of August 2025, market opened at 1.15742. That was the open. Then the highest the highest Euro USD traded to as at 6th of August 2025 was 1.16686, and the lowest is 1.115643. Then we have the closed at 1.11602. So that is the four things each candlestick shows us. It shows us the open, the high, the low, and close of each day. For the daily time frame, each candlestick here shows us trading activity that happen within 24 hours. Trading activity that happen within 24 hours. That is why it's a graphical representation of price. Graphical representation of trading activity in respect to time. So if you go to 4 hours time frame, each candlestick represents 4 hours of trading activity. As you go lower, each candlestick represents 4 hours of trading activities. Even if you move up to the 1 week time frame, the weekly time frame. So the weekly time frame now, each candlestick represents trading activity that happen within a week. within a week. So this is trading activity that happen on Monday 28th to Friday. So each candlestick here represents 1 week of trading activity. Then what are the importance or uses of candlestick? What are the uses? Or is it just a graphical representation of trading activity? How can it help us as a trader that is looking at a candlesticks? How can it help us? So one of the number one uses of candlesticks are some uses of candlesticks are: one, it shows price movements. It shows price movements. So I have the uses right here. Shows price movements. It can be used to support market sentiment. Just the way we see each green candle means bullishness, means the market is bullish. And identify reversal signals, can be used to confirm trade entries. Help to set SL and TP. You can use it to read liquidity and manipulation. These are the uses of candlesticks. Then we have common candlestick pattern that you can use to identify the reversal signal or confirm a trade entry, or to read liquidity or manipulation. So I have some common candlestick pattern. First, we have the bullish engulfing. We have the bearish. This is the engulfing candle pattern. We have this bullish engulfing, and this is the bearish engulfing. This bullish engulfing, just we have when the second candle engulfs the first candle entirely. When the green candle engulf a red candle, this is bullish engulfing, and this is the bearish engulfing when the red candle engulfs a green candle. That is a bearish engulfing pattern. So this can be used as trend continuation. This candlestick can be used as trend continuation. If seen as in a key level, it can be used to confirm a trade. If this is in a key level, maybe inside an order block, or a higher time frame support or resistance, if you trade that, this can be used as confirmation to take a buy, and this can be used as confirmation to take a sell. Then if this is spotted on a higher time frame, this indicates a trend continuation. If it's spotted on a higher time frame, like on the daily, this indicates a trend continuation. So once you see these candlesticks, I think we are sure that next day, the next candle will take this high. So we can use it as a confirmation to look for buys to go take the high. If we spot it on a daily time frame. So you can use it that is where you can use it for confirmation. Then if you are using it to take entry after using it to spot confirmation, it can serve as your SL. Once you see this kind of candlestick, your SL can be at the bottom if you are buying, or if you are selling, your SL can be at the top. So these are where you can use it for trend. You can use it to confirm a trend. You can use it to set SL, and you can use it to confirm a trade. Then here we have the hammer candle. This is the bullish hammer candle, and this is bearish hammer candle. This candle just entails of two things, like is known for two things, which is it have a smaller body. If it has a body, then a wick. This wick on the bullish aspect now is rejecting lower prices, hence why it's bullish. And on the bearish side, is rejecting higher prices. Hence the bearishness. So this can be used to confirm for confirmation if it's at a key support or a key point of interest, maybe a good OB, FVG, or it can also be used to spot reversal or liquidity grabs or liquidity sweep. So this candle now, once you see it takes an equal low off a market, you can use it as confirmation to take entry, to buy, to open a buy trade, to take a buy. You put your stops on the low and you set your target. Then so this ones, once you see this one, this bearish hammer candle can be used to trade reversal, clears a high. Is the wick clears a high, you can use it to take a sell and short the market just by seeing this candlestick taking a ranging market, maybe an equal high. This wick takes it out, close below. You can use it as confirmation, put in your trade, your stop at the high and short the market. So if spotted on higher time frame, you can use it to spot that okay, this market is not more ready to go up, it's time to start selling. Once you see this kind of candlesticks on the higher time frame. Then we have the doji. We have the doji candlestick. This is the bullish doji and the bearish doji. So the doji candlestick is a good reversal pattern candlestick or continuation also, depending on the context, on where you see it. If this is spotted on a higher time frame, FVG, can use it to take continuation. On the bullish side, use it to take trade up, open the trade and put your stop below. So this doji candlestick just rejecting lower prices. It's a strong reversal and continuation candlestick depending on where you spot it. Pro tip: candlestick alone can be used to take a trade. You have to use it you have to combine other things to it, but once spotted can be used as confirmation to take a trade on the lower time frame. Then on the higher time frame, you can use it to spot reversals, you can use it to spot manipulation of the market and liquidity grabs. Then this is bearish doji, rejecting higher prices, which means the next candlestick now should close below. On a higher time frame, if we spot this kind of candlestick, we know that the next day candlestick is going to close below the highs, the low of this. In this case, it does not usually used to have a low sometimes, but you close below this area the next day. So here we have the morning star, a morning star. This is the bullish morning star pattern. Then this is the bearish. So this candlestick now is classic ICT 3 candle pattern. This is classic ICT 3 candle pattern, where we have the first candle, the second and the third candle. So when we see this kind of candlestick, we can use it to take entry, use it as confirmation to take entry. We can use this to lead this market sentiment. We can use this to read the market sentiment. When we see this 3 candle pattern on daily time frame, we already know that okay, the next candle that will print the next day is going to close above the third candle, even if it does not close most of the time, because everything works in trading, but not every time. So you just know that the next day the next candle is going to close above this third candle. The next candle is going to close above this third candle. So on the lower time frame, having that in mind, you can use it to look for trade or an entry to take the high of the third candle. Then if spotted on a key support, in this case an SMT trader, a bullish OB. If spotted on a good bullish OB, it can be used as confirmation. Enter the trade, stops below candle 2. Same thing for bullish, bearish morning star. Spotted on higher time frame, we already know that okay, this trend is going to go down. That okay, the trend is going to reverse. Knowing this in mind, and the next candlestick is going to take away the low of the 3rd-day candle. The 4th candlestick will take the low of the 3rd-day candle. For example, now once we see a high taken out, normally we are supposed to see a continuation upward, but instead of seeing a continuation upward, the 3 days candle, the next 3 days candle created this. We already know that okay, we should sell this classic ICT pattern. So we have the next candlestick here. We have the white soldiers, 3 white soldiers, the bullish and bearish white soldiers. This is the bearish white soldier and this is the bullish white soldier. This, when you see 3 candles moving bullishly, 3 consecutive bullish candle, is called the bullish 3 white soldiers. This is used for trend continuation and market sentiment. Once you see this, we already know that okay, the market is so bullish. Everybody is so bullish and rigging the price of the currency pair higher. So this is a good continuation candlestick. It can also be used as confirmation on the lower time frame, depending on where you see it. Then on the higher time frame like daily, this shows us that market is very bullish. The market is very bullish and people are buying this market, are bullish with this particular currency pair or crypto or asset, whatever it may be. But in this case, Euro USD. Then we have the bearish candlestick pattern. So we have the indecisive candlestick. The indecisive. I think I do not have it here, but let's show what an indecisive candlestick is. So where we have something of this nature, and it's printed on the daily time frame. Yeah, something of this nature. Then indecisive candlestick is when the market opened and closed with a small body. Then we say that okay, the people are indecisive. They don't know whether to rig the market higher or to rig it lower. So people are indecisive on what to do to the market. I think this printed on the daily time frame. So we still go over to the chart to see some of examples of this candlestick working out in real time. So once we spot this kind of candlestick, this is in the indecisive candlestick. So the market don't know, or the participant of the market don't know whether to rig the market higher or should we go lower. They just opened and closed. They opened and closed near to each other. So the trading activity that happened wasn't that much for that day, if it happened on a daily or for a weekly. So it's best, if you want to trade this kind of candlestick, we should just wait for the manipulation of highs or low, or the total close of the highs or low to take continuation, because the market participants are indecisive, or the market makers are indecisive on where to take the market to. So that is that for indecision candlestick. This is called an indecision candlestick. So let's go to the chart and see some of these examples. So please like and subscribe. It will help my video to reach a lot of people and help them. And please comment on the comments if I have helped you on this video. This video have helped you in any way as a beginner. Comment on the drop a comment on the comment section, like, so other people could see it. So here on the daily, okay, right here we have the indecisive candlestick I was talking about just now. This indecisive candlestick, it opened and closed near to each other. So the market participant was indecisive on Thursday, 7th of August 2025. And here we have the hammer candlestick. This is a doji. You have the hammer candlestick right here, or doji. But we just know it's rejecting the lower prices. Just like I said, this could be used to spot continuation. So happen on the daily time frame, rejecting the lower prices, and this is a fair value gap right here. If you don't know what a fair value gap is, we still get to it on this video, on this channel. So hang around, like and subscribe so you get notified when we upload new videos. So just like I said, anticipate that on the daily time frame, once I spot this, the next candlestick should take the high, which is what happened here. The next candlestick took the high of the hammer candle that happened on Tuesday, 5th of August. Here we have the indecisive. So to trade this thing, it's best to wait for the high gets taken. If the high gets taken, we take a short, or the low gets taken, we look for a long, or we just engulf above it, close above it, then we know that okay, this market still want to continue upward. And here we have the doji. See, it does not even have a wick on the low. So this doji now, rejecting higher prices on a norms, is supposed to be going down, but the wick just took the low. The wick of this candle, could look at it there, the wick took the lows of this, manipulated the low and engulfed. Engulfed above it. So engulfing candle is not just when you see a one candle. Just what it means is the next candle that prints just close above the first candle. That is engulf. So if you join these three candles, this is morning star. These three candles is morning star. Though the wick came down, but we have the first candle, second candle, and the third candle closed above the first candle. So seeing it on a daily time frame, we should look for that the next candle, that the third candle high should be taken or closed above. It didn't happen the next day, it didn't happen the third day, but the fourth day it closed above it. So nothing is perfect on trading, because human beings are not perfect. Human beings' actions are not perfect. So here we have the doji also. This is a doji also, and we have this doji supposed to be going higher, but the next day just closed above, just took the highs of that doji. So when you see each candle stick on any time frame, we should just anticipate, okay, this is what is going to happen, but at least let the high just be taken. So this now supposed to continue, and the next candle is supposed to print maybe a big green candle upward, but no, the next day just took the high and engulfed below. The two of them, this candle doji and this big candle here, expansion candle here, combined together, is an engulfing candle. Engulfing candle, engulfed the low, and the next day took the low of this. So this is an engulfing candle on the daily time frame, used to support market sentiment that okay, we are bullish and we change to bearish. Just by seeing this candle, you could sell the next 2 days and you make profit. So here, these 3 candles now could be called the 3 white soldiers, going up 1, 2, 3. The next day still went up. Was not that bullish as expected, but that's it. That is still it. So this candlestick, I didn't mark this thing. Once I see this kind of candlestick, I do call it, I call that candlestick my special candlestick. This candlestick right here, this dodgy engulf, this dodgy bearish dodgy, then the next candle, the next day engulfed, I call it a special candlestick. Once I see it on the daily time frame, already know the next day is going to buy. Like this happened 90% of the time. I forgot to draw it out, but when I see this thing, I just call it special candlestick pattern, because the next day will always go up. On a lower time frame, maybe 15 minutes, once I spot this on a demand zone, on a good order block, I'll put my limit order right here, put my stops on the low. So in this case, looking at the dodgy alone, you expected the next day to take the low, but it didn't. Everything happened, but not every time. But you saw the next day just engulfed, which now becomes an engulfing candle pattern. Combining the two of them, combining this candle and this candle, it becomes an engulfing candle pattern. So this is special candlestick for me. Use it to take long, and being on higher time frame, we use this thing to confirm. I use it to confirm continuation upward, and I know that okay, next day I'm going to take a buy because I see this. So I'll look for something, a trade entry that will enable me to take, to buy the market, to long the market. So this is 3 white soldiers, bullish 3 white soldiers. First candle is bullish, second candle bullish, third candle bullish. We already know that okay, the next day is going to be bullish, which is what happened. The next day took the high, even though it created a dodgy here, created another hammer here, but kept on going higher, getting to higher prices. So on a so let's go to 15-minute time frame. The video is getting longer, but let me know if I could see an example of where we could have used it to take a trade, to take a confirmation. So if I could get only one, so like right here now, we got something right here. We have this hammer candle used for manipulation, took this low, liquidity grab, took this low, then started buying. You could have opened your entry here, although you won't get tagged in. Then we have another one right here, took this low, engulfed. I could take my entry right here, I could buy the market, right here. I could buy, but that won't get you anywhere though. But if you trade 1.4, this is a good trade. Then we have one here. This I spotted today. I spotted this one during the day. We have this an FVG here, and we have this hammer candle rejecting the higher prices. Rejecting the higher prices, engulfed below. You could take a sell here. I missed it, but I spotted this. When I spotted, it was too late for me to take an entry. But you could open a trade here. Could be used as confirmation. So stops at the high. Stops at the high. He nearly get taken, but he did not. TP 3 hour. That is a nice 3 hour trade right there. Let's look for more. Let's look for more. I need ones that is clearer. Okay. Right here, though it's not clean, but this is the trade I took on Tuesday, just by using candlesticks. This candle right here took the low, and we got a engulfing, and that candle closing above it. Did not happen immediately, but took a buy just by seeing that. Let me take away the wicks. So this candle right here took the low, and I got this candle closing above it. Open the trade right here. Open the trade right here. Stops was below the wicks though. From where here targeted 3 hour. Targeted 3 hour. 3 hour was not far from here though. 3 hour came in before the manipulation, before the consolidation. Right here. This was the trade. So this is how I could have taken this trade, by just using candlesticks, putting my stops as below it. That is how candlestick help us to take trade, and we use it to put in stops. Use it to put in stops. So I could show more and more example, because I trade mostly EU. But the video is getting longer. So thank you very much. Don't forget to like and subscribe. See you on the next one.